All right, now let us look at the last sort of level of assurance, but which is not attainable. That's why they don't really include it in the types of assurance. But let's just talk about an absolute assurance. An absolute assurance is basically 100% assurance. You are perfectly sure whatever you're saying, 100%, right? But in audit or in assurance, this is not possible, right? It's not possible, right? An absolute assurance cannot be assured, not be issued due to the inherent limitation in the process as a result of. So these are the reasons why we cannot never reach 100% degree of, we can never give 100% degree of confidence in whatever we're saying because of this reason. The three reasons. The first one is the lack of precision often associated with the subject matter, right? Most of the subject matter that we will be evaluating as auditors will lack precision. Precision is just being exact. Like, for example, let's look at financial statements. Financial statements is not an exact science. What do I mean? Right? There are other elements in the financial statements which are just estimates or judgments. For example, provisions, depreciation. Those ones are just estimates. So, because the subject matter, some of the elements in the subject matter were based on judgment of people or estimates, right? How can the guys evaluating it give 100% when the subject matter was lacked precision, right? Or some elements were based on judgment. Judgment is basically subjective, right? It's subjective. So because the subject matter was based on some elements was based on estimates and subjectivity, then it will be hard for the one making the evaluation to actually give 100% assurance. That's the first one. The second one is that the nature of evidence available. They're saying that the nature of evidence that are available, right, will make us not to give an absolute assurance. What do they mean? Right. So the nature of the evidence, right, they can be in form of two. It's either it can be persuasive, persuasive or conclusive. You will meet these words: conclusive, conclusive, right? These are basically sort of not types, but sort of the natures of evidence that can be there. But when it comes to assurance, right, the nature of most of the evidence that we are going to be finding are persuasive rather than what? Conclusive. So what does persuasive mean? Persuasive is coming from it, persuade. So it is evidence that will make you believe in a particular statement or premise. Will just make you what? Believe. Just make you believe. While conclusive is evidence that are based on facts. Evidence that are based on facts. Let me give you an example. So what I'm saying is, persuasive, they will just make you believe. It's not really a fact, right? This one is a fact. So most of the evidence in assurance are persuasive rather than what? Conclusive. Let me give you an example of what conclusive and the persuasive evidence is. For example, a lady is carrying a baby, right? The baby is dressed uh, in a skirt, right? Let me just say a dress, right? A long dress. The thing is, right? A person, by seeing the baby in a dress, will make him believe that the gender or the sex of the baby is female, right? It means that the dress has made him believe that the gender of the baby is female. But it might not be like that, because some parents, I've seen some parents dressing their male children in dress. I don't know. Maybe they were anticipating a girl. They had already bought girlish clothes. So it's a boy. They just say, whatever. We're gonna dress him in dress him in the female clothes. So just because I saw the baby in dress, right, made me believe that it is a girl. Probably it might be a boy. It's possible, right? But it has made you believe, because we know that dresses are worn by ladies. So it has just made you to believe. It's persuading you to believe. It's not based on fact. That's basically persuasive evidence. They will just make you believe. Persuasive evidence. While conclusive, in the same scenario, conclusive, right? The very easiest way to know a gender of a baby is just by undressing her, right? You will know the gender by undressing her, right? That's a fact, right? If you undress her, you probably know the gender, male or female. There is no arguments. That's conclusive. It is based on a fact. Nothing is persuading you. That's a fact. But in the other case, it was the dress that was persuading you to believe that's a what? That's a lady, or that's a girl, a boy, right? It was persuading you. So, type of evidence that we'll find in audit are in that manner, making you believe it is true. But it might also not be true, right? They will just be persuasive. So, because the evidence is persuasive, right? You can never give 100% just because your evidence is persuasive. As I've said, just looking at a baby in a dress and you assume that that one is a girl is persuasive evidence. It might not be the absolute fact, right? So because of the nature of most of the evidence that is available, you can never give an absolute. The best you can do is reasonable. And last is the time scale. Time scale, the audit will be done, or the assurance service will be done in a limited time. Imagine audit will not last more than 1 month. So imagine that a person is auditing work that has been done for a whole entire year in 1 month. It means that they will skip other stuff, right? Just because the time scale is just so small. They cannot audit everything. So they will start to use techniques like sampling, right? Which is just basically picking randomly, right? Some stuff to test. So because of the time scale, right, you are not able to test everything, right? So because you cannot able to test everything, then you cannot never give 100%. The best you can do is a reasonable assurance. So because of these three, we can never give 100% assurance. First, the lack of precision of the subject matter. Two, the lack of the nature of the evidence, right? If we were to explain that, this one would say that most of the evidence is persuasive rather than what? Conclusive. And the time scale, we have a shorter period to evaluate the subject matter. So because of this, we can never give 100%. Now let's look at the type of services provided by an accountant or an auditor. What are the type of services that can be provided by an accountant or an auditor, right? So they can be classified in two broader classes, and these are assurance services, those services that we've been talking about, those that are giving confidence in a particular matter, right? And another one could be the non-assurance services. Those ones are not really giving confidence, right? They're just other services that are not giving assurance or confidence. So let's look at the first assurance. Let's look at the examples of assurance service. The first one is a statutory audit. A statutory audit. What is a statutory audit? An audit that is required by law. Because when you're talking about statutory, it's basically by law. So what's the definition of statutory audit? Is an audit required by law. Another one can be non-statutory audit, an audit that is not required by law. As simple as that, right? Another one can be, another assurance service is basically review of prospective financial information. Reviewing prospective financial information. Somebody can give you some prospective financial information for you to review, right? And you can make a judgment. Then that means you are assuring somebody on the prospective financial information. Another is the attestation engagement. We will also look at attestation engagement. All these are assurance services. Another one is value for money audits. Value for money audits. You'll be auditing how a company has used their money, right? In terms of economy, efficiency, and effectiveness. Internal audits, right? Internal audits. Because statutory audit can also be termed an external audit, right? External audit, right? Well, this one is an internal audit, right? An internal audit. So, in other words, what you're saying is external audit can either be statutory or non-statutory. Let me just say it like that. External audit can either be statutory or non-statutory. So, the meaning of statutory audit is audit required by law, while the meaning of non-statutory audit is audit that is not required by law. Right. So, the main focus of the whole module, when you're talking about audit, we're talking about the external audit, not the internal audit. No, we'll be talking about the external audit in the remaining chapters of the syllabus. So, the external audit. But an internal audit is also one of an assurance service. Review on a system reliability. They can tell you to go review their system reliability. So that's another assurance, because you'll be giving assurance or confidence on the reliability of their system. Due diligence. When you hear the word due diligence, it's just basically sort of an audit that is done before you acquire a company. For example, the time FDH was acquiring Malawi Savings Bank, they had to do a due diligence so that the management of FDH should know what they are getting into, a due diligence. So a due diligence is an audit that is done before acquiring another company. It's called a due diligence, right? All these are what are assurance services. But okay, before we go there, let's look at some. We will talk about these three. We will talk about statutory audit. We'll talk about prospective review of prospective financial information. We'll talk about attestation engagement. So let's look at statutory audit. This is an audit that is required by law. It's an audit that is required by law, right? So if we were to classify statutory audits in the types of assurance engagements, then this one is a what? An assertion based, because the conclusion will either be the financial statements are correct or not, or financial statements are true and fair. As simple as that. We do not do direct reporting. No, we do assertion-based engagement when it comes to what? Statutory audit. Right? Why do we actually provide an assertion-based? This is because auditor's opinion is given in relationship to the assertions made by the directors in the financial statement analyzed as follows. Right? So let's look at the analysis of the statutory audit. Right? When it comes to statutory audit, right? Statutory audit, the practitioner is the auditor. Practitioner is the auditor. The responsible party is the management or the director. The guys that are responsible, right? The responsible party are the directors or managers. The intended user, right, are the shareholders. The subject matter is the financial statements. The criteria can either be the accounting standards or the national laws. And conclusion, which is the report, right? It actually states that these financial statements show a true and fair. That's the wording, right? Financial statement show a true and fair view. The other wording is financial statement conform material conform with set criteria. I think that's another wording, but it's just basically the most easiest conclusion, right? Straightforward is saying that this financial statement show a true and fair view. And the type of level of assurance that can be given, right, is reasonable level of assurance. Why can we give a reasonable level of assurance? Because this is what is audit of what? Historical financial statements. Historical financial statements. We are auditing something that has already been done. Because we are auditing something that has occurred in the past, it is easier for you to gather evidence of stuff that already happened in the past. So you are able to give a limited level, or rather a reasonable level of assurance. That's basically to do with statutory audits or audit of what? Historical financial information. Another one we can be told to review prospective financial information. When talk about prospective, is to do with the future. So they can tell you to analyze, for example, forecasts, which are budgets for the future, right? So if you are given that task to analyze the forecast, right? This is just basically a review of what? The financial prospective financial information. So this involves reviewing and reporting on reasonableness of the assumption used in the preparations of the PFI, such as profit forecast. So if a person gives you profit forecast, because this will happen in the future, right? This will happen in the future. It means that evidence, right, will be limited for you to actually make a conclusion. So what you do is you just report on the reasonableness of the assumption. For example, they were actually doing a profit forecast. So they're assuming that sales will increase by 10%. So you know that sales, 10% increase is reasonable from the look of things. But if they say that sales will increase by 120%, but last year it only increased by 2%, then that's not reasonable. Those are the assumptions that you are going to be analyzing, just because you cannot gather information about the future. The only thing that you can report about is the reasonableness of the assumptions that they are using, right? So, because of the nature of the information, that is, they are relating the future, right? We cannot issue a reasonable assurance. We can never issue a reasonable assurance, right? Because we say that we can issue a reasonable assurance where the subject matter is identifiable, right? The subject matter is subject to information gathering. Things that are happening in the future, you can never gather evidence, right? The future is volatile. It can change at any time. So because you cannot give a reasonable assurance, you need to give a limited assurance, right? Reducing your level of assurance to a moderate level, right? So because we're issuing a limited level of assurance, right, we know that it needs to be negative. So the wording has to be, I have no reason to believe that the subject matter does not conform with the criteria, right? I have no reason to believe that the subject matter does not conform with set criteria, right? Because what? You haven't been able to gather quite information to make a conclusion. That's to do with that one. Now let's look at attestation engagement. An attestation engagement is just an engagement where a practitioner, by virtue of issuing a report, provides some level of assurance on information that is responsible of another party. So an attestation is just basically a practitioner issuing a report, right, on an item that was prepared by another person, a responsible party. You did not do the report yourself, but another party did the report. So that's basically called an attestation engagement. So these are basically the assurance engagements, right? Or assurance services provided by an accountant. Now let us look at some non-assurance, right, services that an accountant can provide. The first one is compilation of financial information. You can tell an accountant to compile your financial information. Ask him to prepare your financial statements, right? All the 5 statements, changes of profit or loss, changes in equity, all the 5 statements. You can ask an accountant to do that for you. But that's not an assurance. He's not giving you any assurance. He's just preparing your financial statements, right? Liquidation and receivership work. He can be engaged in what? Liquidating a company or selling items of a company when you are about to liquidate the company. This is not to do with assurance, right? He can be asked to compile tax return. In terms of tax, he can be required to or be engaged in providing this tax compilation of tax return. Another thing can be engaged in tax planning and advice to client, right? All these are not assurance services. He can be asked to perform agreed upon procedures regarding financial information. He can also be asked to do a forensic audit, a forensic investigation and audit. So one can argue why is it not an assurance service? An assurance service. We're saying forensic investigation and audit. Let us look at what forensic investigation and audit is. Right. So a forensic investigation, right, is an audit carried out in response to suspicion of wrongdoing, usually to prove or disapprove a certain assumption. For example, a person or a group are carrying out a fraud. A person was negligent in carrying out his work to substantiate an assurance claim or to provide evidence in court. So the question is, how is it not an assurance service? I too used to get puzzled. When I talk about assurance service, it's just basically you trying to give confidence in a particular subject matter, right? While when it comes to forensic investigation and audit, right, this one is done when you want to carry out a suspicion wrongdoing. So the thing is, you are trying to catch thieves, in other words, because audit is not catching thieves. No, 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 no. Audit is not about catching thieves. But this particular audit, forensic investigation, is about trying to find a wrongdoing. So because the aim is for you to find a suspicion in a wrongdoing, it's not just giving confidence in the financial, no, 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 but you are trying to find if things are there have been thieves, or you are trying to any suspicion, because an audit is not done when you are suspecting that people are staying in your company. No, no. If people are staying in your company, then you are doing an audit to do that, then that one is a what, a forensic audit, right? A forensic audit. Because a mere audit, you are not trying to find a wrongdoing, you are just auditing. When something is wrong, you ask the directors what to correct. Well, for this one, you are trying to find the wrongdoers. That's why this one is not part of assurance service, just because this one they're trying to catch. They're not trying to give confidence, right, in the subject matter, but they're trying to catch a wrongdoing. Suspicion, rather. Let me just suspicion of a wrongdoing. So it might be that a group of people are carrying out fraud, or there's been negligence, or where you are trying to substantiate a crime. For example, a house has burned down. The investigations that are done are basically forensic investigations. So that's why this one is not part of assurance. So that's basically the end of the whole chapter. I hope we got the concept of assurance. We know how to apply assurance, the type of assurance, and the whole concepts behind assurance. Thank you.